After analyzing real estate markets across all 50 states, studying demographic trends, business migrations, tax policies, and economic fundamentals, I've identified one state that stands above all others as the absolute must-have location for property investment in 2026 and beyond. This isn't just another growth market or trending destination. This is the single state that combines every factor successful property investors need to build generational wealth. Most real estate investors make the fatal mistake of chasing markets that have already peaked or investing in locations based on lifestyle preferences rather than economic fundamentals. They buy properties in markets that feel familiar or attractive without understanding whether those markets have the structural advantages needed to support long-term property appreciation and rental income growth. But sophisticated investors think completely differently about real estate markets. They analyze tax structures, business climates, population flows, infrastructure development, and regulatory environments to identify locations that will attract capital, businesses, and residents over decades, not just years. They invest where the mathematics are strongest, regardless of personal preferences or current market popularity. What makes this particular state extraordinary is that it doesn't just excel in one or two areas that support real estate investment. It dominates in every single category that determines long-term property investment success. The convergence of favorable factors in this state creates investment opportunities that won't exist anywhere else in the country over the next decade. If you want to understand which state represents the single best opportunity for building real estate wealth, if you're ready to position yourself in the market that will outperform all others regardless of economic conditions, then subscribe to this channel right now, because what I'm about to reveal could be the most profitable real estate decision you'll ever make. The state that every serious property investor must consider is Texas, and I'm going to prove to you why Texas represents the most compelling real estate investment opportunity in America. This isn't about oil and gas or any single industry. This is about a complete economic ecosystem that supports sustained real estate demand across multiple sectors and price ranges. The first factor that makes Texas irresistible for property investors is the tax structure that creates permanent competitive advantages over high-tax states. Texas has no state income tax, which means residents keep more of their earnings while businesses retain more of their profits. This tax advantage attracts both individuals and corporations seeking to optimize their financial positions. But the tax benefits go beyond just income taxes. Texas property taxes are reasonable relative to the value provided through infrastructure and services, while business taxes remain competitive enough to attract corporate relocations from expensive states. The overall tax burden in Texas is significantly lower than California, New York, Illinois, and other high-tax states that are losing residents and businesses. This tax differential creates permanent migration pressure that supports real estate demand in Texas while undermining demand in high-tax states. As tax rates continue increasing in fiscally irresponsible states, the tax advantages of Texas become more valuable, driving accelerating migration that benefits Texas property owners. The second factor is the scale and diversity of economic growth that makes Texas less vulnerable to single industry downturns than other states. Texas has successfully diversified its economy beyond traditional energy dependence to include technology, aerospace, manufacturing, agriculture, healthcare, and financial services across multiple metropolitan areas. Austin has become a major technology hub, attracting companies like Tesla, Oracle, and Apple. Dallas provides corporate headquarters for numerous Fortune 500 companies. Houston combines energy with healthcare and aerospace industries. San Antonio offers military, healthcare, and technology sector exposure. This diversification provides multiple sources of employment and income growth, supporting real estate demand. The scale of Texas economic activity is extraordinary. If Texas were an independent country, it would have the 8th largest economy in the world. This economic foundation provides stability and growth potential that smaller states or single industry regions cannot match. Texas economic growth consistently exceeds national averages while providing resilience during economic downturns. The third factor is demographic trends that create sustained housing demand across different age groups and income levels. Texas population growth has exceeded national averages for decades while maintaining younger demographics than most states. The combination of domestic migration from other states and international immigration provides consistent demand for housing across all market segments. But the quality of Texas migration is particularly important for real estate investors. Texas attracts working-age professionals, entrepreneurs, and established businesses rather than just retirees or government-dependent populations. This migration pattern supports employment growth and income levels that sustain premium real estate markets. Texas birth rates also exceed national averages, providing demographic momentum for future housing demand. While many states face aging populations and declining birth rates that reduce long-term real estate demand, Texas demographics support sustained growth in household formation and housing needs. The fourth factor is infrastructure development that supports continued economic and population growth. Texas has invested heavily in transportation networks, energy systems, and telecommunications infrastructure that can accommodate substantial additional growth without major constraints. Multiple major airports, extensive highway systems, shipping ports, and rail networks provide logistics advantages for businesses while supporting residential development across large geographic areas. Energy infrastructure provides reliable, affordable power that attracts manufacturing and data center operations requiring substantial electricity capacity. Texas infrastructure development continues expanding to accommodate growth rather than constraining it like many other states where aging infrastructure creates bottlenecks that limit economic expansion. This proactive infrastructure investment supports continued business attraction and real estate development. The fifth factor is regulatory environment that facilitates rather than obstructs real estate development and business operations. Texas maintains streamlined permitting processes and reasonable development regulations that allow markets to respond quickly to housing demand without artificial constraints that drive up costs and limit supply. Business-friendly regulations attract corporate relocations and expansions that provide employment growth supporting residential real estate demand. Texas' regulatory environment particularly benefits manufacturing, technology, and energy companies that face increasing regulatory burdens in other states. The regulatory predictability in Texas also provides investment confidence that property rights will be protected and business operations will remain viable over long investment time horizons. Investors need confidence that current advantages will persist rather than being eliminated by political changes or regulatory shifts. The sixth factor is geographic advantages that provide natural competitive moats supporting long-term economic growth. Texas' central location provides logistics advantages for businesses serving national markets, while access to international shipping through Gulf Coast ports supports trade and manufacturing operations. Climate allows year-round economic activity without severe weather disruptions that constrain other regions. Natural resources beyond oil and gas include agriculture, renewable energy potential, and land availability that support diverse economic activities. Texas' geographic scale provides room for expansion and development that many other states lack. When businesses or populations outgrow specific metropolitan areas, Texas offers alternative locations within the same state rather than forcing migration to other states with different tax and regulatory environments. Now let me show you exactly which Texas markets offer the best investment opportunities and how to position yourself to capture the wealth-building potential that this state provides. Because understanding that Texas is the must-have state is only valuable if you know which specific markets within Texas offer the best risk-adjusted returns for property investors. The first Texas market that offers exceptional opportunity is Austin, which has become the primary destination for technology companies fleeing California's hostile business environment. Major corporations including Tesla, Oracle, Apple, Google, Facebook, and Amazon have established significant operations in Austin, creating high-paying employment that supports premium real estate markets. Austin's transformation from a college town to a major technology hub has created sustained demand for both residential and commercial real estate across all price ranges. Young professionals attracted by technology employment drive demand for apartments and starter homes, while established professionals and executives need larger homes and luxury properties. The Austin market offers opportunities in downtown condominiums serving technology workers, suburban family homes in growing school districts, and rental properties near major employment centers. The combination of technology sector growth and university presence creates diverse rental demand from students, young professionals, and corporate relocatees. But Austin real estate requires careful market selection because rapid growth has created some overpriced submarkets while other areas remain attractively valued. Focus on locations with direct access to major employment centers and established infrastructure rather than speculative developments in outlying areas. The second exceptional market is Dallas-Fort Worth, which combines corporate headquarters concentration with diverse economic sectors that provide stability and growth potential. Dallas attracts financial services, telecommunications, and corporate headquarters, while Fort Worth provides aerospace and defense industry exposure. The Dallas-Fort Worth Metroplex is one of the fastest growing metropolitan areas in the country, with population increases that consistently exceed housing supply growth. This supply-demand imbalance supports steady property appreciation while providing substantial rental demand across different property types and price ranges. Dallas-Fort Worth offers opportunities ranging from urban lofts and condominiums serving downtown professionals to suburban family homes in growing communities and commercial properties in expanding business districts. The market size and diversity provide options for different investment strategies and risk tolerances. The transportation infrastructure in Dallas-Fort Worth, including 2 major airports and extensive highway systems, supports continued business attraction and population growth. This infrastructure advantage ensures that the market can accommodate expansion without the constraints that limit other metropolitan areas. The third compelling market is Houston, which has successfully diversified beyond traditional energy dependence to include healthcare, aerospace, technology, and international trade. The Texas Medical Center alone employs over 100,000 people, while NASA and aerospace companies provide additional high-income employment. Houston's international business connections through the Port of Houston and energy industry relationships create global economic ties that support premium real estate demand. The city attracts international executives and professionals who require luxury housing and are less sensitive to price than typical local buyers. Houston real estate opportunities include urban high-rises serving energy and healthcare professionals, suburban developments in growing communities, and industrial properties supporting port and logistics operations. The market provides both appreciation potential and steady rental income opportunities. The energy sector presence in Houston provides countercyclical investment opportunities because energy performs well during periods when other sectors face challenges. This economic diversification helps Houston real estate maintain stability during broader economic downturns. The fourth market worth considering is San Antonio, which combines military presence with growing healthcare, technology, and tourism sectors. The stable employment base from military operations provides recession resistance, while growing private sector employment drives market expansion. San Antonio offers more affordable entry points for real estate investors while still providing access to Texas growth trends. Property prices remain reasonable relative to income levels, while rental yields often exceed other Texas metropolitan areas, providing better cash flow for income-focused investors. The demographics in San Antonio include substantial military and healthcare employment that provides reliable rental demand, while growing technology and business services sectors attract higher income residents who support premium real estate markets. Now let me give you the specific investment strategies that work best for capitalizing on Texas real estate opportunities while managing the risks that could reduce your returns. The key insight is that Texas offers opportunities for different investment approaches depending on your capital availability and risk tolerance. For investors with limited capital, focus on cash flow positive rental properties in established neighborhoods with strong employment access. Look for single-family homes or small multifamily properties that can generate positive monthly cash flow after all expenses, including property taxes, insurance, maintenance, and vacancy allowances. Texas property taxes are higher than some states, but remain reasonable relative to property values and income levels in most markets. Factor these carrying costs into your cash flow calculations to ensure properties remain profitable throughout economic cycles and rental market fluctuations. For investors with substantial capital, consider commercial properties or luxury residential developments in high-growth submarkets. These investments require larger minimum amounts, but often provide superior appreciation potential and the ability to add value through improvements or development. The key to commercial real estate success in Texas is understanding which sectors benefit most from the business migration and economic growth trends. Office buildings serving technology companies, industrial properties supporting logistics and manufacturing, and retail properties in affluent suburban areas all offer different risk-return profiles. Geographic diversification within Texas provides risk management while ensuring participation in the overall state growth trends. Instead of concentrating investments in any single metropolitan area, consider spreading investments across Austin, Dallas, Houston, and San Antonio to capture different economic drivers while reducing concentration risk. But timing your entry into Texas markets requires understanding current pricing relative to fundamentals and growth trajectories. Some Texas submarkets have appreciated rapidly and may be temporarily overpriced, while others remain attractively valued despite strong fundamental support. The migration trends supporting Texas real estate are accelerating rather than slowing, suggesting that current market strength will continue for years rather than being a temporary phenomenon. The structural advantages that make Texas attractive are permanent features rather than cyclical factors. However, success in Texas real estate requires local market knowledge and professional relationships that take time to develop. Consider starting with real estate investment trusts focused on Texas properties or partnering with experienced local investors before attempting direct property ownership in unfamiliar markets. The financing environment for Texas real estate remains favorable because lenders recognize the state's economic strength and growth potential. Interest rates and lending terms for Texas properties often reflect the reduced risk that lenders associate with strong economic fundamentals, but avoid over-leveraging even in strong markets like Texas because real estate cycles can create temporary price volatility that affects highly leveraged investments. Maintain conservative debt ratios and adequate cash reserves to ride out any temporary market disruptions while holding properties for long-term appreciation. Now let me address the potential risks and objections to Texas real estate investing because understanding these challenges is crucial for making informed decisions and avoiding costly mistakes that could reduce your returns or increase your investment risks. The first concern many investors raise is that Texas markets have already appreciated significantly and may be overpriced relative to historical norms. While some Texas submarkets have seen rapid price growth, the fundamental drivers supporting demand remain strong and are likely to persist for decades rather than being temporary phenomena. The business migration from high-tax states to Texas represents a permanent structural shift rather than a cyclical trend. Companies that relocate operations to Texas for tax and regulatory advantages are unlikely to move back to hostile business environments, creating sustained employment and income growth that supports property values. Compare Texas appreciation to the underlying economic growth, and you'll find that property values in most markets remain reasonable relative to income levels, employment growth, and business expansion. Texas real estate has appreciated because the fundamentals justify higher values, not because of speculation or artificial demand. The second concern is that rapid population growth could lead to overbuilding that creates excess supply and reduces property appreciation potential. While construction activity has increased in Texas markets, demand growth continues outpacing supply additions in most metropolitan areas. The regulatory environment in Texas facilitates development, which helps markets respond to demand and prevents the severe supply shortages that drive property prices to unsustainable levels in constrained markets. Adequate supply growth supports market stability rather than creating the boom-bust cycles that affect supply-constrained markets. Monitor construction pipeline data in specific submarkets to avoid areas where speculative overbuilding might create temporary oversupply, but don't avoid Texas markets entirely based on construction activity that may be responding appropriately to strong demand fundamentals. The third concern is exposure to energy sector volatility that could affect Texas economic growth and real estate demand. While energy remains important to Texas economy, the state has successfully diversified to reduce dependence on any single industry, including energy. Technology, healthcare, aerospace, manufacturing, and agriculture all provide substantial economic foundation, independent of energy sector performance. This diversification means that energy sector downturns no longer devastate Texas markets the way they did in previous decades. Even during energy sector stress, the other economic sectors in Texas continue attracting businesses and residents, providing support for real estate markets. The overall economic strength of Texas typically compensates for energy sector weakness during commodity price downturns. Here's your specific action plan for positioning yourself in Texas real estate markets. First, educate yourself about Texas real estate fundamentals by researching specific metropolitan areas and understanding local market dynamics, employment trends, and development patterns. Focus initially on markets where you can understand and monitor conditions effectively rather than trying to invest across all Texas markets simultaneously. Develop expertise in one or two metropolitan areas before expanding to additional markets. Second, build relationships with local real estate professionals, including agents, property managers, contractors, lenders, and other service providers who understand Texas markets and can provide ongoing support for investment activities. Texas real estate success requires local knowledge and reliable professional relationships that take time to develop. Start building these relationships before you need them for specific transactions, and prioritize professionals with experience in investment properties rather than just residential sales. Third, start with smaller investments that allow you to gain experience and market knowledge before committing larger amounts of capital. Consider single-family rental properties or small multifamily investments that provide learning opportunities without excessive risk exposure. Real estate investing success requires understanding gained through actual transaction experience rather than just theoretical knowledge. Starting small allows you to make inevitable beginner mistakes without major financial consequences while building skills and confidence. Fourth, establish financing relationships with lenders who understand Texas markets and investment property lending. Having pre-approved financing available allows you to act quickly when attractive opportunities arise, while understanding lending requirements helps you evaluate potential investments accurately. Consider working with local banks and credit unions that focus on Texas real estate markets rather than large national lenders who may not understand regional market dynamics or provide competitive terms for local investments. The timeline for Texas real estate investment success depends on your approach and market conditions, but investors who position themselves correctly can expect positive cash flows within the first year and substantial appreciation over 3 to 5 year holding periods. The key success factors include buying properties with positive cash flow potential, maintaining adequate reserves for maintenance and vacancy periods, and holding properties long enough to benefit from appreciation trends rather than trying to time short-term market movements. But the most important factor is recognizing that Texas real estate investment requires the same disciplined approach as any other investment strategy. Avoid speculation based on appreciation alone. Ensure adequate diversification across properties and markets, and maintain conservative financing that allows you to weather temporary market volatility. The competitive advantages that make Texas the must-have state for real estate investment are likely to persist and strengthen over time as other states continue implementing policies that drive businesses and residents to more favorable environments. This creates sustained tailwinds for Texas real estate that few other states can match. However, success requires implementing appropriate strategies for your specific situation rather than following generic advice that might not fit your capital availability, risk tolerance, or investment objectives. Texas offers opportunities for different approaches, but all require careful planning and disciplined execution. If you're convinced that Texas represents the single best opportunity for real estate investment but haven't yet taken action to position yourself, start immediately with education and relationship building that prepares you for future investment opportunities. Subscribe to this channel for ongoing analysis of Texas real estate markets and investment strategies as demographic and economic trends continue developing. Share this video with anyone considering real estate investments who needs to understand why Texas stands above all other states. Leave a comment below and tell me which Texas market interests you most for real estate investment and what your timeline is for getting started. The community of investors who understand state-level advantages can share market intelligence and investment strategies. Remember, real estate success comes from understanding and positioning ahead of major trends rather than chasing markets that have already peaked. Texas offers the best combination of current opportunity and long-term growth potential available anywhere in American real estate markets. The question isn't whether Texas will outperform other states in real estate appreciation and rental income growth. The question is whether you'll position yourself to benefit from advantages that are obvious to sophisticated investors but still underappreciated by the broader market. The opportunity exists now, but it won't remain available at current prices indefinitely.